Hello guys, welcome back to the channel. In today's video we are going to be doing an update on my £10,000 stocks and shares ISA portfolio series, where a couple of months ago I invested 10k into a Hargreaves Lansdown ISA portfolio, and we sort of just see how it's got on. If I look a bit sort of flustered, a bit hot in today's video, there's two reasons for that. Firstly, it's really hot outside, it's really humid outside. It's currently the 12th of May. It's been really hot recently and there's just been thunderstorms, so that's the first reason. The second reason is I just hit a pretty nasty leg day, so been getting the Bulgarian split squats in, and I'm just a bit hot and I've had a warm protein shake. So there you go, there's a little insight into my life and just a little disclaimer there. But with that covered off, let's get into the video. I think it's going to be quite an interesting one to go through and see exactly what's happened. We've had a big rebound in markets recently. Trump's had a revelation. He's gone back on a ton of his sort of initial big tariff things that scared the market in the first place. And as I say, the market's rebounded, perhaps more so than it should have done, should justifiably have done. But here we are, and the portfolio is up, so I cannot complain. But yeah, anyway, let's dive into the Excel dashboard and we'll take it from there. And before we go any further, I just want to remind everyone that this is not financial advice. This video is for entertainment purposes only. So with that said, let's jump over to the Excel. So here we are on the Excel dashboard, and I think I should start off with this chart, which looks lovely. We've had a big rebound in markets. You can see we got as low as £9,295 at one point in the portfolio, but we've since shot back up to 10,553, which is lovely. This number's not as nice, minus 5%. Again, I'll go on to TrustNet, a website that shows you different charts and you can play around with things. I did open this series at possibly the worst time, so being down 5% is not just me being an idiot, it's just the markets and when Trump decided to sort of cause mayhem. But anyway, that's beside the point, that's behind us now, but it's not, it's still present. But anyway, we're up pretty significantly since last time. You can see that dark blue gain bar there is creeping its way back up, and it's almost on top of the light blue contributions bar. Quickly on that point, I'm going to dart around a bit, but that's fine. No one watches these videos anyway, until this one where it goes viral. Contributions wise, I was hoping that I'd be able to stick like high hundreds, maybe like £1,000 a month in to this portfolio since the start. April was a bit of a write-off because I had my car insurance and my phone. I got a new phone to do these videos with and all that stuff, and a new laptop. So that sort of wrote that month off. May, if you watched my last video, you probably didn't, but if you watched my last video, you'll know I was hoping to put about £1,000 in this month when I got my paycheck on the 7th. However, I got my MOT and I was out about £1,000 and a bit, £1,100 roughly, and then some other miscellaneous expenses. So yet again, I'm not able to contribute to this portfolio, which is quite annoying, but I can't do much about it. Fingers crossed, June will be the first month I can put money into it. I mean, if you'd have asked me at the time, start of April, start of May, well, a couple of days ago even, do you want to be putting money into the markets now? And I'd have probably said no, to be honest with you. Clearly, that would have been a good time to invest based on this chart, and the charts we'll come on to soon. But I was a bit of a pussy, for want of a better word. So I would have probably, if you'd have given me the chance to pick when do I not want to invest, it would have been then. Because if I would have, with Trump, and he's so unpredictable, like if it was a recession or something, not that recessions are predictable, but you sort of, you know what you're getting into. With Trump, he could have just put his foot down, let his ego take over and just gone to town on China or whoever else he wanted to go to town on. So it was a bit of a scary time to invest. All respect to you if you did, and you've done very well out of it. But anyway, all that to say, I haven't invested any money since March, which sort of hurts me. But it is what it is. Coming back to the top and sort of the performance of the different funds and where they've gone. Polar Capital Global Insurance continues just to be an absolute beast, up despite being US dollar denominated. It's my favourite fund, hence why it's got a almost 30% allocation. It was 30% at the start, but obviously the contributions and things like that have slightly changed the allocations. Fidelity Special Situations is a UK fund, and that smashed it. And then you've got LNG, Health and Pharma, which I put in there as like a defensive component. So it's supposed to be those three, Polar Capital, Fidelity and LNG. They were supposed to be sort of the defensive characteristic part of the portfolio. And it hasn't yet played out like that for the Global Health and Pharma Index. I think RFK coming into office hasn't helped. I think the fact that Novo Nordisk has been quite a big weighting in that fund has not helped either. But I still believe in that long term. Like, I think I've got a video on that. Hopefully I have. A video on Health and Pharma and why I'm invested in Health and Pharma. I've definitely got a video on Novo Nordisk, so go and check that out. But yeah, coming on to the other three, American smaller companies have had a huge rebound. That was down almost 20% or just over at one point, so that's lovely to see. Henderson Tech, I think it was down 18-19%, so that's also had a big rebound. And those two? No, I don't think those two. Tech I definitely added to with the 1,100. I think BlackRock Global Equity Unconstrained I also added to. Maybe the smaller companies too. But yeah, anyway, coming on to BlackRock finally. That's sort of like a BlackRock Best Ideas type fund, a global equity concentrated fund, and that's only down 5% now. And when today's repricing goes through, because the S&P 500 is currently up about 3%, and the way mutual funds work is they reprice the next day or the day after, that will be looking quite nice. So fingers crossed. I was going to say fingers crossed by the next time we'll have gains, but then that just means I'm buying in when I get my contributions at a high price. So swings and roundabouts. But either way, the chart's looking nicer, and I'm feeling better off. So 2 thumbs up from me. Let's jump over to the TrustNet chart so we can break this down a little bit further, and then I can talk about basically what Trump has been up to. So here we are on TrustNet, and I'm going to start with the chart that I've started off with the other videos, but again, we get a ton of new viewers to this series, so I need to remind everyone. I started at the top here. So pretty awful timing from a market's perspective. You know, this is a 3-year timescale, 3-year chart, so I could have started here, could have started here, could have started here, and we'd had a nice uptrend, at least for the start, but no, I started it right at the peak. And what you can see on this chart, actually I should break that down, is my portfolio, the one we've just seen, versus the IA global sector. So that is any global equity fund, whether it's active or passive, gets thrown into the IA global sector. So it's global equities versus global equities. And again, although this portfolio didn't exist 3 years ago, if it had, the way I set it up, it would have beautifully outperformed the global sector, and I'd looked really smart on this series. But what's actually happened is not quite that, and I invested at the top and it's gone down. So yeah, that's not great. But coming in to sort of closer look, again, this chart doesn't make me look great, but I have confidence that this will shift going forward over the longer term. My portfolio is slightly underperforming the global sector, which is somewhat understandable given the smaller cap exposure. I think that's the main detriment. Small cap and tech. Within the tech fund, obviously it's pure tech. And within the global equity unconstrained, there's a lot of tech in there. And that's just been double hammered by Trump and his tariffs and the global economic uncertainty. So not quite a big surprise that that's underperformed, but I think it should hopefully reverse over the longer term. At least that would justify you spending your hard-earned time, but it's not hard-earned time, it was given to you when you're born, your time watching these videos. Anyway, just rambling now. Right, let's look at the constituent parts and share with you on that front. Right, let's move that. So, let's start with A, because it looks the best. Fidelity Special Situations, the UK market. I have got a video on the UK market. It's been pretty unloved across the board for 10-15 years now. And if you go on Reddit, go on YouTube, anything, you'll see everyone saying the UK is uninvestable. All you need to do is buy Tesla, all you need to do is buy the S&P 500 and you'll be rich forever. That's not quite how markets work, and typically things go in cycles. So something is out of favour for 3, 5, 10 years. Normally, the longer it's out of favour, the better a deal it is. In my opinion, that's what the UK is, not financial advice, of course. But the UK, despite having pretty big rally since 2022, or actually since COVID really, I think still pretty underappreciated. So I have a pretty healthy weighting to the UK. Sorry, just ignore that huge number. I don't know what that's about. Yeah, I have a pretty healthy weighting to the UK. And that's not just because I'm a UK investor. That's genuinely because, unbiased, I think it's a great valuation to enter from. On the opposite, you can see G there, Columbia Threadneedle American Smaller Companies, has been smashed by Trump tariffs. not only have you got the economic uncertainty, but you've also got, as I mentioned in previous videos, the US dollar being down since Liberation Day, the Trump Liberation Day. So that's been double smashed, as has LNG, as has Henderson, and as has BlackRock. BlackRock's actually had quite a decent bounce back. You can see it was down from the peak, because it was up there. That was been plus six to minus 20, so almost a 30% drawdown, and now we're only at -5. So we've had a pretty decent recovery there. And then you've got B. I just want to show you B. Let's see if we can get just, oh no, we want to leave that on. Just Polar Capital Global Insurance versus the global equity sector, because this is so good. Right, that's the drawdown characteristic. So you can see the big sell-off, we went from, let's say, +5 to -12. Let's call it a 17% drawdown in the global equity sector. Polar Capital went from, let's call it 5 to -5, 10%. So half the drawdown, which is honestly incredible. And then just for I mean, again, we're using backwards looking data, so I can pick which funds look good and then put them into the portfolio. But I would look at that performance profile. How can you argue with that? COVID, you had a big drop, but just the rest of the time, there's no drawdown. It's incredible. Not financial advice, but this is my favourite fund in the fund universe by miles. And I've probably sat, as part of my job, I've probably sat in on 500, I'll say 500 fund presentations, whether it's at conferences, one-on-ones, webinars, all that stuff. Probably more than that. And this is my favourite one. This is my best one. So yeah, anyway, I digress. That's the performance covered off. I know we don't get too in-depth in these, but I've got in-depth videos elsewhere anyway. And if you have any questions, let me know in the comments. I just wanted to touch on Trump and what's been going on in markets recently. Let's just quickly chuck the S&P 500 up on the screen. We'll do a live review. 3% today. That is crazy. Small caps up 3.5. Russell 2000. I mean, it's pretty good, right? That's pretty good. Trump's basically said that, I think Trump tariffs have been paused with China. I mean, I should know this. I'm an investment analyst. I do investments full time. However, I sort of disengaged from all the Trump stuff because it changes on a daily, weekly basis. So daily, weekly, that was on purpose. That was daily/weekly. Daily/weekly basis. So it's almost like, well, if I pay attention to the news today, in 2 days' time, it's going to be irrelevant. So I'm in and out of the news, but I know that today Trump and China have reached some sort of deal, and now the market's happy. To me, it does seem like a bit of an overreaction. Oh, what have I done there? Go away, please. Go away, please. If I go back to the S&P 500 quickly, right, and we look at year to date, we are now only 5% off the highs, and since then we've had Trump come in, smash the bleep out of US confidence. He's eroded trust in the US to some extent. You saw a big exodus from US assets. You saw bond yields spiking, which basically means everyone's selling out their bonds. You've seen him attack the Fed, undermine the Fed's credibility, aka the US central bank's credibility, which is a no-no. Yet markets are only down 5%, and earnings have been getting downgraded. So basically the index has become more expensive, probably. Yeah, it has. Since the peak, the index has become more expensive because, this is quite technical, well, not that technical. Anyway, the price has come down, but the earnings have fallen more. So for every dollar of earnings, you're now paying more. And I think that's a bit ridiculous, personally. I'm not complaining too much because, as with most people, I'm pretty healthily exposed to the US economy and US assets in my portfolio. But if I was hesitant to invest a month ago, I'd be even more hesitant to invest now after this little bounce back. But yeah, I'm sure you'll see on YouTube and Reddit and things that everyone's raving about Tesla, and him and hers is the new stock of the day, new stock of the flavour of the month, which is basically weight loss drugs, but memeified. So yeah, there's definitely animal spirits in the market. You know, you've got a lot of retail presence here. I saw, oh God, I have to try and find it and get it on the screen. Retail flows, i.e. mum and dad investors, people like me, people like you, have been absolutely flooding into the market, the equity market recently, whereas institutions have been pulling out, which can be a good thing, in the sense of purely on the price aspect, because if retail buys in It creates sort of a momentum effect. And the thing with institutions, I've just noticed my thing's out of balance. Hopefully that's not been too bad the entire video. Is that better? I don't know. You'll see me adjusting it live. As I was saying, yeah, institutional money, as smart as you might like to imagine it is, a lot of it's just egos and keeping their job. So if they're suddenly underperforming the index by 2%, they will chase, they will buy back in, they'll say, right, screw the hedges, we're going back in. And that can create a sort of feedback loop, which is probably what you've seen on this recent squeeze. This recent squeeze up has probably been retail buying in mixed with some short covering on the institutional side. But yeah, I mean, that's one thing. In the short term, it's good. It looks good for prices. But longer term, normally retail's quite stupid. Myself included in that to some extent. And they tend to buy tops and sell bottoms. So you've got people like Buffett holding record amounts of cash. Like, maybe now's the time to be a bit risk off as opposed to risk on, but the market clearly thinks otherwise. So yeah, those are my, anyway, that was a bit of a ramble, but those are my musings on the market for the whole 5 people that have watched this video to the end. Who knows, maybe this one will go viral. My fingers are crossed. But yeah, hopefully you enjoyed the video. A bit of a ramble, like usual. I'm hoping to do some more structured content, let's say, in the form of stock analysis or sort of investment fundamental type videos, educational type videos coming up soon. But for now, leave a like, subscribe, share with your friends, comment, heart, press the bell, sign up to my email link that I don't have. And yeah, I'll see you in the next one.